Hi, guys. Welcome to the How I Raise It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs and VCs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Yoav Oz of Rep. Rep is an AI sales chatbot that customizes every step of the customer journey. In this interview, we discuss raising capital from U.S. investors for a company based outside the U.S., his specific process for running a fast fundraise, questions he asks investors to check for alignment, how to handle a pivot, and more. If you're tuning into this podcast to learn how to raise capital for your business, be sure to check out foundersuite.com if you're a startup or fundingstack.com if you're a VC or advisor. Both platforms will give you access to an awesome collection of tools for raising capital, including a massive investor database, a new Get Intro feature to help you get warm intros, a CRM to manage a raise, a virtual data room to run due diligence, plus pitch deck hosting, investor updates, email tools, and much more. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Yoav.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com and fundingstack.com. Today I have Yoav Oz of HelloRep.ai coming to us from Tel Aviv. How's your day going?
Good. How is yours?
So far, so good. Mine's just starting. We're in different time zones, but it's a gorgeous day
Yeah.
here in Northern California, so can't complain. All right, well, let's jump into this. So, what do you guys do? What is HelloRep?
HelloRep, it's an interesting startup. What we did, we mimic the salesperson in a brick and mortar stores, but for e-commerce website. So basically, we know to detect who need assistance, need help with the shopping experience or support experience, and proactively approach him 10 seconds before we decide to leave the website and assist him in real time based on his behavior and what he did and where he came from and things like that.
Okay, so what kind of data are you using to sort of create this personal AI shopper? Is it where he's clicking or questions he's asking a chatbot or something else?
No, it took us years to build technology, and I think what made it possible is because me and my co-founder that knew each other such for a long time brought this type of behavioral AI prediction from our previous companies. And what we're doing, we're collecting almost any data point that you can think about a new visitor that coming to the website. And it can be where he coming from, what he's doing on the website, when he's holding a product, or when he's moving between places inside the website, the speed of the mouse and everything like that. It's more than 500 data points. And all those data points give us like ranking of like when someone is about to leave. And we know that by those action and behaviors, he probably 92% accuracy about to leave. So we know to approach him. And because we have all those data points, we know exactly what he's looking for, what he needs assistance with, what was the emotion. There is a lot of data sets that we're using.
Makes sense from the big picture view, but like you say, you have data points like where he came from. What does that mean? Like the previous website he was on or some other things?
So maybe I can simulate it for you, like to make it like a much easier to understand. You know this experience when you come into a brick and mortar stores, you have two types of salespeople. Um, Good one and a great one. The good one is usually going to jump in immediately when you enter to the store and saying like, "Hey, can I assist you?" And you're like, "Wait a second, let me look around and to see if there is something that I'm looking to buy." A great salesperson will basically look at you when you enter to the store, see from where you're coming from, see where you're walking inside of the aisles, shelves, if you're holding a product, you're not holding a product, if you're looking on something, holding on something for a longer time. And the moment that you're going to hold a product in your hands and like looking around, you can see it in your eyes and your behavior. And then we would jump in and come to you and telling you, "Oh, I see that you're looking on those shoes that are great for half marathon. By the way, we have like a different color and 20% off. And if you will give you your member club, I probably can tell you if you have a discount." This is a great salesperson, and this is what we're doing, but for e-commerce. So all the data points of a great salesperson, of analyzing when to approach, how to approach, what you did, from where entrance you came, and what you looked for. So you have all this data that he know exactly what he will need and to suggest it to the right product. This is what we're doing in e-commerce.
Yeah, get it. Interesting. And what's the AI part of it? Like how's so that sounds really interesting. It sounds like, advanced tech beyond what we've seen on many e-commerce websites, right? A lot of people are trying to improve the e-commerce experience, but what's the AI layer on all that?
So let's start from the beginning. E-commerce didn't change in the past 15 years. It's kind of IKEA catalog with a search and menu. But consumers change and technology change. On the consumer side, people got to use chat after COVID, in COVID. And th this is giving confidence. It's giving them a way that they can talk to someone and see the responses and to evaluate the brand. So consumers got to use chat, conversation, ChatGPT help also, to text and to talk to everyone. On the side of the technology, ChatGPT made everything more accurate. But ChatGPT is great, but if you don't have more AI technologies that based on unique data sets that you created, you're not going to give any advantage on anyone else. The AI part that we're having is the behavioral AI, the drop-off detection engine that know like when someone is about to leave, the emotion detector that telling us also to know like what kind of emotion the person has. All of this combined, connecting to LLMs, it can be ChatGPT, it can be anyone. We're agnostic to this type of solution, to the LLM technology. And by those three technologies, we pretty much enrich the data and know like how to make a meaningful conversation experience.
Very cool. And is there a sweet spot in terms of e-commerce, like clothing, or I mean, is it high variability types of products where there are a lot of different options? Is that sort of where it fits, or is it pretty universal? Like, where do you really sit? Yeah.
So I think like a salesperson in brick and mortar is pretty universal. Everyone needs, when you have a lot of traffic and a lot of people that come into your store, you want to serve everyone. So to have a good salesperson that trained well on your products, it's really important. But yeah, there is two sweet spots. One of them is when there is expensive product and people asking a lot of questions before making a decision. The other one when you have a lot of products and then it's very confusing and it's happening with stores that selling coffee, teas, auto parts, pharma, clothing, almost even jewelries, like almost everywhere.
Very cool. All right, let's quickly talk about the backstory. How'd you come up with this, and what were you guys doing before this? I always love the origin story.
I used to have a company. This is like my second one. The first one I sold to a Nasdaq company 5 years ago, even more. And then I decided that I need some time off to think like what I'm going to do next. But in reality, what I was doing is for like 3 months online shopping. 99% of the time when I was doing online shopping, I wasn't buying any product. Like, and I started asking myself, like, if I saw a cool brand, a cool product on Facebook, TikTok, and came to the website, someone paid for me to come to the website. So why I'm not buying it? If I like the brand, like the product. And then I realized that I have like a ton of questions. This coffee is good for my machine. Those shoes are great for half a marathon. And there is no one there to answer me. I'm not going to give like a phone call if I have like a number on the website. The chat usually respond after 24 hours or like only help in more on the support tickets and stuff like that. So I decided that I want to build something that can help me, assist me, and help to more people. When I say it's a huge problem in the e-commerce, when only 1% conversion rate for most of the e-commerce website in W.
What was your previous startup? Was it in e-commerce or something else?
No, it was on AI in edtech, uh, and it was called Spotted. Got sold to Iron Source.
Sorry, say it again.
I sold it to Iron Source.
Okay.
It's a huge company, very
Yeah.
famous in Israel.
Were these both based in Israel? Did you start both these companies in Israel?
Yeah, this company now is an American company, but we started in Israel. Yeah.
Yeah. Is it, not to go too deep into this, but what's the startup scene like in Israel? I mean, you always hear about how Israel really punches above its weight in terms of creating startups and entrepreneurs and everything, but what's the sort of vibe on the street, so to speak?
Competitive, very competitive. like there is a lot of great people with great ideas, and it's a small country. Um, so you need really to do something with a lot of value to be above the noise. And there will always each day new startups with great ideas, young people, old people, like everyone coming with new ideas. And because the ecosystem is it's very small, everyone know each other and helping to each other. But at the
Mm.
same time, fighting on the same capital that you have here when you're starting, if it's angels, VCs, family offices, if you have great networking from the beginning and relationship, you're approaching also to VCs in the US and in Europe. But you need to have a great networking to do that.
That was sort of my next question. Is there lots of seed capital there? I mean, I know there's quite a few venture funds, but like, is there a pretty good angel and seed VC network, or do you have to look to the US for that?
In the end, it's like a small place, so there is limits. But there is a great VCs, great investors here. Um, I think the Israeli investors, because they see so many startups, have their own threshold on what they invest. So when you start raising capital with them, you're getting a lot of backlash. Like you're getting a lot of feedback that can help you to improve immediately and move really fast.
Hmm.
So when you're getting to the point that you have network in the US and stuff like that, you usually like very prepared. You already know your materials, you know what VC is looking for. So it can assist in that way. And there is a lot of seed capital here also.
Yeah. Well, okay, let's shift gears into talking about raising capital for this. So you sold your first company. So did you just bootstrap this from your winnings from that, or how'd you get this thing off the ground financially?
Capital. I think from the moment that we decided to start the company until having the capital in the bank, it took us 4 months. So we immediately went to VCs and private investors.
Okay, that's pretty fast. Now, you had a track record, you had a previous company. It sounds like it was a success. What else did you have at this point when you started raising?
Presentation.
That's it?
That's it. Web presentation. It's a little bit different when you doing it for like the second time. You're coming with more experience. Um, you can show good results very fast. It's very easy for investors to check on you and to see your background and to talk to other investors and to talk to companies even. And the data is there already. So they can make decision really fast. And if the valuation right, if you build something that they're interested, like in the end, invest, in my opinion, investors in early stage looking for four things. They're looking for like uh, team, market, product, pricing. Product will change, pricing will change. Market has to grow and to be a huge market and part of the future, the team need to be a very, very good team. So if you're getting high rank on the team and in the market, and on the market, the investors know that the product and pricing will change in the future. So when you're coming with the experience and the ability for them to check this, it's much more easy to get funding. It's still difficult. Like to raise capital, it's always difficult in any stage, even if you're a second timer. It's always difficult.
Yeah, interesting. Are you able to share what the acquisition of your first startup was? Because I imagine, depending on how that turned out, that could definitely influence
It's
investors' attitude about you, right? Yeah.
so I cannot share like the amount, but I can tell you that it was a roller coaster. It's not like when you're hearing someone selling a company, like I said it, everyone thinks like, oh wow, what a great success. But in reality, to go to the point that you're selling your company, in my experience, it was one of the most difficult things that I had. The first proposal that we got, and I pushed the board and everyone in the company to sell the company, was more than $150 million. And it was a significant because we had like a lot of equity in the company. I felt as the one that was flying and traveling around like 200 days a year. That is a good place to sell the company, and we need to move fast. And it was a huge opportunity because it was a huge company from China that want to build also R&D in Israel. But the board, because of the success of the company and the fast and how fast it's grow, And my co-founder decided that they don't want to sell the company. They sold the previous company. They had enough capital. For me, it was experience that can change my life. After that, we got another proposal. It was lower, not by far, but was lower. Same, I pushed to sell it. I brought the company to buy it again, and again, they voted not to sell the company. I decided back then, me and another co-founder, that we want to pursue something else after 7 years doing that. And in the end, after a few months, the board and the rest of the company came back to me and told me, like, listen, we need your help to sell the company. It was a wrong decision. Assist us to sell it. And I sold it, but for much less than $150 million. It was a huge number. Also for them, they could see like much more. The company back then raised only twice, and was like growing and making and becoming profitable very fast, like in 2 years. So uh, I cannot share the number. I can tell you that it was a roller coaster.
Yeah, that's interesting. Well, let me spend just a minute on this because actually we haven't talked about this that much on this show about the exit, because most people on the show are first-time founders having just raised their first fund. So was that pretty difficult? Like, were you, you can share whatever you can, but were you kind of fighting or pretty angry at the board who blocked those first proposals? Like, was that, difficult? Kind of a dumb question, but
It's
you know what I'm saying? Yeah.
no, it's not a dumb question. It's like there is not one feeling that you have. You have a few of them. And it's not fighting. It's more like discuss. It's a discussion. Like each board, you have discussions, what to do and what not. But in the moment that you're getting a proposal on the table, you need to update the board that you got a proposal. When you're doing that, there is a long discussion about it, and everyone has their own opinion. Yeah, it's very difficult. Um, it's very difficult to get like refusal from the board and also from your co-founders because they believe in things differently. Also, you can feel that you're getting to the point that you want to do something else. You're getting to the point that you see you got something very successful, and also you see that the market is shifting and big companies is going to buy more companies like you. So if you're not going to be the one that's going to be sold, sell the company. They will buy someone else, and it's confusing, it's disappointing. Sometimes you believe that they were right and you are wrong, but only time in the future can tell you that. And it was like there was a lot of feelings, not fighting. Like in the end, if you have good co-founders, or like people that you trust, everything is a discussion. And sometimes, people will not do what you think is right, and you need to align with them and to trust that you did your best and you're going to do even better now.
Yeah, that's interesting. What you hear stories sometimes about the misalignment of founder outcome and VC outcome, right? You hear this because obviously VCs are aiming for that, huge home run to kind of make up their whole portfolio. Founders can do very well with something less than that, right? So you hear about this sort of misalignment, and you hear sometimes stories where the board does block a acquisition that would be obviously life changing for the founder, and then later on, it doesn't get sold, and there's obviously conflict when it doesn't work out like that. But um, sounds like you had open discussions about this and got through it. So that's interesting.
In the end, it's a risk. It's kind of a risk of everyone need to make their decision. Like if a founders decided that like you want to sell the company and the VC is blocking him, like the board, not the VC, um, the board know that there is a risk that the founders will leave, and then they need to have a replacement that can lead the company. If not, the company will crash. So it's always going to be a trade. If the board believe that the company can grow and have the people to lead it and not the founders, they can make those decisions. If the founders decide to sell because they had enough, and it's not aligned with the promise that they gave to the VC, it's also something that the board need to check if they invested in the right people. Um, but I think we're hearing more on the unique stories than the usual stories that happening.
Yeah, interesting. Last question on this, and we'll change gears. But I assume the board had majority control, right? Like the VCs had majority control of the board. They must have if they're blocking deals, right? Or was
No,
how
so
big was the board? Yeah.
sometimes it depends on. on how many founders you have also. Like if the board, and let's say that you are four founders, two want to sell, two don't want to sell, and then there is the boards that don't want to sell.
Yeah.
It's a majority.
Right. Yeah. Gotcha. Okay, cool. Interesting. I could go off on a lot more questions, but let's get into the fundraising. So you guys, you have your track record, you had a presentation. How did you go about kind of identifying the right investors for this type of deal?
So for me, each fundraising starting from the same process.
Yeah,
Tier
share your
one, tier
process. That'd be
two.
great. If you
Um,
yeah.
yeah, of course. For me, it's always like having like tier one, tier two, and tier three of VCs. Okay. Usually all of them I want to have like some connection from other founders or other companies or like a personal connection. And usually all of them need to fit to what I'm doing and need to fit like to see that they not invest in too many companies in my space because there is allocation for each VC. So usually if it's went over 15%, 1.5, they will not invest like in my in my field, like in e-commerce because they took the risk on that and they have their own LPs. But basically, I'm splitting it into tier one, tier two, and tier three. Probably like tier one will not invest in you if it didn't came with something that is, changing the world to be something else, and you know how to convince them and coming with the experiences, the four things that I said before. Um, so probably tier two and tier three will invest in you. It's great to get all the feedback from tier one and to do like 10 to 20 meetings. If 5 to 20 meetings with tier one VCs, get all the feedback and align all the presentation, product, KPIs, and things that you need to get for each step. If it's pre-seed, seed, round A, and round B. Then focusing on the tier two and tier three. Usually trying like to get as many intros and to build a list of 20 of tier two, 20 of tier three, and then to get at least 3 to 4 timesheets in a timeline. You're trying to do it in 1 month to focus everyone to the timeline that you want to close the round after doing all the process that I just mentioned. When you get to that point, if you have term sheets, usually tier two VCs will not let to a lead investor from tier three VC to lead the round if they have the opportunity. So you're getting to the point that usually, if you know how to do it, getting from like those 50, 60 meetings that I just mentioned can be even more to 3, 4 term sheets, you can get a really good term sheet and to negotiate between them and to see like what is relevant for you and to choose the right one for you also. It's not only valuation. Valuation is one small aspect, but I think it's the relationship and the personal touch that you have with investors that is more important because if it's a lead investor who is going to sit in your board and you want them to be very aligned to you, you want like other stuff that in the term sheets, PA can be aligned to the methodology that can giving you the room to operate as a CEO for the long term and not for the short term.
Yeah, really good stuff. So let me drill down on one of those things. So I like this idea of segmenting investors into tier one, tier two, tier three. It's now let me see if I get this correct though. In many cases, I've told founders start with tier three, get practice, get your pitch kind of grooving, then move up to tier two, and then try and leverage those into tier one. You're kind of going the opposite, right? If I'm hearing this correctly, you're starting with tier one, probably not going to invest, but you're getting all that rich feedback, and then you're sort of optimizing for tier two. Is that somewhat accurate?
Yeah, and I can say more than that. Like for most of the VCs or most of the investors that I'm coming to a meeting, I'm usually starting with questions that I have. How much capital you have? When was the last funding for the VC? What is the sweet spot of investing? What was your last 4 or 5 investment? Of course, I'm checking it in Crunchbase. I'm trying to see if we align on the field that my company is, on the amount, on the process, to shrink as many stuff that not related to the startup that can come and say no to you. You know, if it's their switch of partners, if it's the end of the fund, if they like in the middle of process, like I don't want to waste the time of myself and on others. And this is like the first thing that I'm doing in a meeting. For tier one VCs, you're trying to get as much information that can get you better. They have the experience. They see a lot of them. They have a CRM. They have all the feedbacks. They probably checking it before the meeting. They can see what was the feedback of other partners on the same field, what is the competition that they see, how they look at the market, how they look at the pricing, what is the trends now, and all of those stuff after 5 meetings like that you can switch the words. You can switch like a lot of things that they want to see. You can see if you align to that. You can understand the matrix better, and if it's not the right time to come back in 1 month and 2 months when you are right in the matrix that you have, it can give you so much. And the most important, those 5 to 10 meetings can really help you to decide if now it's a good time to raise capital or you need to wait a little bit more, or if you missed a great timeline to raise capital, and then it's better to do a safe. It's better to do like something with your current investor, maybe to look for like a small investor that can help you to get to a few months more. Maybe the valuation is not right. It can give you a lot.
Yeah, it's interesting. VCs are notorious for not giving much feedback in many cases because they don't want to create an argument with the founder, right? We're passing on you, here's some feedback. Founders are naturally going to argue back on that. So a lot of VCs don't give feedback. Are you kind of interpreting this based on like questions they're asking and just comments during the
Yes.
pitch, things like that?
Yeah, I'm asking a lot of questions and I'm
Yeah.
asking for feedback. I'm
Yeah.
asking for feedback.
Okay.
Like I'm
And you
truly
get
like coming
feedback?
back.
Like, I guess that's my
I'm,
question. Are
I'm
VCs are
getting
giving you feedback? Because that's always been hard.
they yeah, they're giving me feedback. Listen, like they're not giving feedback because they're afraid to help you as an entrepreneur. They're going to see you in the future probably again. They probably want to stay open, like to invest maybe later in stage. They do each one of them that's saying no to me. I'm asking to make me 5 intros to other VCs. It's not easy, by the way, because they said no. It's very difficult for them like to recommend to meet you. But if you ask the right question and you're just not in the sweet spot, or if the timing is not right for them, then it's easy for them to explain why they're not investing in you, not because of you, because of the timeline of the VC. And then the intros getting meaningful insights and meaningful intros that can really help you.
That's interesting too, because that's sort of contrarian advice to what you hear a lot, right? If someone says no to you, don't ask for them for the intro because it'll be a negative intro, right? But you're
I tell you what,
yeah.
I can tell you what is no for me. No
Uh,
for me is when someone is finishing the call and telling me, it was great meeting you. You're building something so interesting. Like, I think it will be like a huge thing in the future. You're the kind of entrepreneurs that we like to invest in. For me, it's always great. Do you want to schedule a call for next week and to go over the things that you said? If he's saying yes and coming to you after 24 hours and like booking a meeting with you, it is a yes to the next step. If he's saying, let me get back to you,
mm,
or like, let me check with the team, probably you don't need to follow up with him. It's a nice way to say no, and you're wasting your time here. When someone is really looking to invest in you, on your product and on your team, it will schedule a meeting in the same call or like a day after.
that's a good point. I like that. Yeah. There's so many ways VCs can say no without saying no. Let me get back to you. That's a great way of a soft no, right? That's good.
Yeah, and 99% of the time you're going to get no. So it's part of the game.
Yeah. Interesting. That's great. And it's okay. So let's conclude this journey. Who ended up raising and how did you put together kind of I believe you had a couple different venture funds bring the round in, right?
Yeah, well, a few investors like in the seed, it was like three great investors that really believe in what we're doing and believe that it's going to be part of the future. We build it 2 years earlier than what we should build it. Like it was, I think if we built the same solution like 2 years after, it was much more easier. And after that, there was VCs that invested in us, but it was very difficult because we pivot. Um, and when you're doing a pivot, some VCs see it as like really strong entrepreneurs that know what they're doing because it's not easy to fire all the clients that you have switching. And usually pivot is technology or market. Um, and when you do something like that, there is a lot of VCs that will not invest in you, but there is some that will see it as like a great opportunity to invest in you. And then the VCs came and invested in us.
What was the pivot? If you can share it in just like really succinctly. Yeah. What was the pivot?
Same idea, but started over voice and then switched to text, to chat.
Who led the this was it the Series A or Seed? I can't remember.
The last the
Yeah.
so the first investment came from a VC, small VC that was leading the round, and another VC that joined, and a family office that joined in too. After that, Oryzn Capital are the one that invested in us and was leading the round. And this year, last year, sorry, 2024, Osage Capital, that is the VC in the US, was leading the new round with Flashpoint and Oryzn Capital also.
Awesome. So with the original or the first set of investors all Israeli based, and then the second round was a mix of US and Israeli?
Very, yeah, yeah.
Okay, let's one question. I'll let you go in just a minute, but what tips would you have for people like yourself? You're based in Israel, but you want to raise money from US investors. How do you kind of bridge that geographical gap?
Listen, I have investors that invest in me from like messaging him on LinkedIn, and that is a VC. And I can tell you that if you see a good VCs on your list that you want intros, go to LinkedIn, see how many connections you have, and you have someone that can make the introduction, or friends or community that you can ask around and to see about those VCs and to see if someone can make you a personal introduction. Cold email, it's very difficult.
Yeah, I'm going to do a shameless product plug. We just released a little Get Intro product that maps your LinkedIn connections and all that stuff and helps you find those intros. So check out foundersuite.com. There's my advertisement. But did you have to set up a US company? Like, were you an Israeli company and then you set up a Delaware C Corp before you started reaching out to US investors? Or was there any other, you know, thing you had to do to kind of raise from US investors?
Yeah, we did a flip in the middle of the fundraising when we saw like a few VCs that put the term sheets. This is when we started to do the flip to a US company because we knew that it's important for them and also for like bigger rounds. If you want to do a round B and round C and to raise more capital, it's better to be US based.
Okay. And then when you made the flip, you became a US company. Were you just flying back and forth? Were you doing this all in Zoom? Like other tips for,
Not
founders
Zoom.
outside the US for raising capital from US investors?
Only when they told me that they want to meet us in person after a DD that took like 30 days, 40 days, only then I took a flight to meet them.
So you would get their, I mean, you would you would kind of get them to the point where they're pretty seriously interested, like maybe not quite putting down a term sheet, but getting close to that, and then you'd fly over and meet them.
Exactly. Like in round A, there is another area like, okay, you have a product market fit, you have pricing that's working, you have a team that got to that point, and you have a market that is growing. But now there is also like metrics, KPIs, numbers, how you grow, and things like that. So if the VC like everything that we signed the DD and telling you like, listen, it's time for us to meet in person. It's the final step. No one going to tell you like to fly, or they will fly to meet you also. But no one going to tell you to fly over if he's not confident that he want to put the term sheets, and only like a meeting face to face is the one that can change it. So if you believe in yourself and you had a lot of meetings and you have a great DD and someone want to meet you, fly and meet him.
Yeah, a great what? Great DD? What'd you say?
Yeah, due diligence.
Oh yeah, okay, gotcha.
Yeah.
Yeah, of course. Would you pack a bunch of Silicon Valley meetings into like 2 weeks, or how did you kind of?
No, just
No.
like doing everything over Zoom, trying to put everything in a timeline. As I said, tier one, tier two, tier three, 1 month that is taking like all
Yeah,
your time. You're not doing anything beside those meetings, and probably like you can get attention sheets like the following month.
yeah. That's a fast timeline. All right, I'll let you get back to work, but any last tips or anything else you haven't shared? Any other tips for founders, US or Israeli based? Doesn't matter. What do you got? Anything? Or are we done?
Um, I think the only thing that I can say, like I think there is a lot of tips that you can get, but I think resilience is the most important thing that you need to have. Mostly when you find when you're raising capital, like it's so difficult to get the no, and to keep going. Each time it's a slap into your face that you like, need to recover and then moving forward because you're putting your guts and out like in each meeting, and spending a lot of time like to change stuff and to make decision. So I think resilience is one of the things that you must have. to succeed, raise capital.
Totally. Very good. All right. If people want to learn more, it's HelloRep.ai, right? Is there anything you want to promote or plug?
Yes. No, no.
No. Well, this is great. Really interesting. Lots of fun stuff. A few contrarian, I guess you could say, ideas, which I like. Your product looks cool. So, any place you want to point maybe listeners, hey, go check out this e-commerce site to see your product in action.
Wow, there is so many of them. We're today getting like, well, one of the most fastest growing companies in the e-commerce space, adding 150 new brands each month. Um, Basically, everyone can come to the website and see all the logos and play with that. And feel free. I can say that if anyone want like to talk or like to have advice, I'm usually one day each week, like giving 4 hours for anyone in Israel, out of Israel, Zoom, on LinkedIn, and trying to help as much as possible to other entrepreneurs that want connection or advices.
That's
Free,
really
of course.
cool.
Like
So you do
I'm
you
not
block
charging
off
for
four
that.
hours a week to coach and advise other
In
founders.
in Israel, we're working from Sunday to Thursday, so usually Friday is the time that I'm trying to give like 4 hours for people.
That's really nice. That's a cool thing. That'd be great to see more founders do that. I love it. All right. Thank you, Yoav. This is super fun. Good luck with HelloRep, and we'll catch you after your next round. All right.
Appreciate it, man. Thank you for the time and having me in your podcast.
All right. Thank you. Over now. Bye.